Hello traders, today is the 15th of February. My name is Devil Hornsey, market analyst trading, and today I'll be taking a look at the euro versus the US dollar. Before we get into the charts, we're going to look at the YouTrading.com Forex heat map. We can see that the euro at the top is currently the strongest of all the currencies that we monitor here. And then we've got the weakest being the Japanese yen and the Swiss franc. British pound is also doing quite well today, so we'll take a look at an economic calendar too. This morning, European Open, 7 o'clock GMT, the UK average earnings minus the bonuses for December came in at 3.7%, which was better than expected, slightly underneath the previous reading, but at the high end of expectations. So that was good for the pound. German ZEW economic sentiment for February, 54.3, slightly underneath expectations, hence why it's in red, but it was above the previous reading, 51.7, so that is a good sort of sign. You know, we need a few months where we build on that. Later on today, we've got US PPI, and so we'll see if there's inflationary price and pressures still remaining in January. Going to the active trader platform, I look to the left, sentiment indicator here. So it's 55% of traders on this platform are trying to short the euro versus US dollar. Obviously, we were short down to the 1.13, which is where we closed out. If you look to the left, all the way back through November, that's where most of the prices, where the bidders and the sellers were matching prices. It's, you know, there's no surprise that we would come back down there and find some support. If we were to go a bit lower, down to the 1.117 to 1.12, we see this base drop rally. There's obviously a reason why that happened. You know, we took out the lows from 24th of November, so swept that. Decent change in direction happened on the 31st of January, and then we've rallied up. Now we've swept the highs of the 13th and 14th of January, and you know, we're back in the middle of the range. So if this bullishness is to continue, then we go back up, test the 1.15, all the way over to the swing high of 9th of November 2021, and that'll be that. I'd imagine this 200 period EMA on the daily chart acts as some sort of resistance, or you know, we gravitate towards it at some point. We haven't tested it since sort of September 2021, so you know, it's a logical place to look for a, you know, taking profits be around here. We look to the left again. We've got this big green candle from the 27th of October. These guys were the last of the buyers before the big dip down into sort of the end of November. So there's going to be some supply up there. So even if we get above the 1.16 spring high here, 1.17 big figure is going to be quite sticky as well. And normally what happens when you've got the 20, the 50 and the 200 all sort of compressing together is we get a compression in price. Obviously, that's what leads the EMAs to do, you know, sort of sideways motion. But what we, you know, there's not a lot you can do apart from trade, you know, with a big stop, if you like, all the way down here at 1.11, or you can just wait for a breakout, retest, and continuation to the upside, or for a continuation of this downtrend to occur. Now, the reason why it might go up is because the recent downfall, if you like, of the euro was because of fears of war on European soil. Today, we've had news out of Russia, obviously. Russia said that they remain committed to the Minsk peace process. There have been other sort of resolutions happening within Russia, where we've had Russian lawmakers voting in favor of the 2 breakaway regions of eastern Ukraine. If that does get passed by Vladimir Putin, then that will definitely create some tension in eastern Ukraine, and I'm sure the Ukrainian forces will not be happy about that, and probably act on that. Unlikely. If they are committed to the Minsk peace process, this breakaway regions aren't going to happen. There has been news out that all Russian military drills started and ended as planned. So now we're waiting to see if there's going to be a withdrawal of troops from the sort of Belarusian, from the eastern sort of side of Ukraine as well, and maybe out of Crimea. There has been a start of Russian Navy military exercises, you know, starting today. So there's still things going on, you know. Other than the rhetoric, other than the words, nothing's really changed. We just need to see everyone go back to base. But for the euro versus US dollar, if this 1.13 is going to be sort of the base, the support, then we need to get through this down period here. Go down to a 30-minute chart. Looking to the left, we had this big sort of breakdown here. On this chart, it's the 11th of February 2022. This 1.1392 will be resistance, and then if we look up here, the next resistance will be around the 1.448. So if I just put those in, we've got this where we had a big move down, and then this one here. So this is where the sort of change in trend could have bounced and run higher on the 10th of February. It didn't. It carried on through, took out the swing low. This is the sort of really sort of the big push to the downside. So if we get above that, get above those stops, then that's how we get to go to the 1.115. Otherwise, if these sellers are still present, just below the 1.14, then we come back down to 1.13 again. All right, so at the moment, I don't see anything setting up really. We're in the middle of the range. It's good that the sort of rhetoric from the geopolitics is turning more bullish. Hopefully that continues and we get to see some actual decent moves. And yeah, maybe the euro versus US dollar goes higher. I think a lot of that will depend today on the US PPI and then the FOMC meeting minutes tomorrow. So I'm not seeing a trade at the moment. I'm just waiting to see how we react to the next set of resistance and support. Okay, good luck today, and I'll speak to you again tomorrow.